All right, well, let's go ahead and get started. It's 9 o'clock and we want to cover everything that we are scheduled to cover today. So just want to first say thanks to everybody who's attending with us live. And then I know that there's lots of people who watch the recording later. So if that's you, we're glad you're able to watch it as well. And thank you to Kari Phillips. She is the owner of RateWise Mortgage. And I felt like it would be a good topic, a good person to have on for our Power 30 guest this week, because the topics that Carrie deals with every single day are the ones that are actually really important to realtors, but especially right now. So the two main things we're going to talk about today are things that pretty much every realtor out there, whether you're a listing agent or a buyer's agent, whatever side of that transaction you're asking yourself these questions and wanting this information that we're going to be talking about today. So I've known Carrie for a long time. I actually met Carrie at the orientation, the realtor orientation. Back then it was called the GLVAR orientation. And I remember I was kind of peppering her with questions, and she likes to say now that she's thinking, easy rookie, just calm down, right? But anyway, ever since that time, since then we've become really good, basically business partners in this business, because I've always seen the lender as an important aspect of what we do as realtors. I kind of see it as like a partnership between a realtor and a lender, and also a pretty good friend. So I'm very happy to have her on today, and I can't wait for all of you guys to get some of the information that she is always readily willing to share with me. So Carrie, why don't you take just a second to give us a quick introduction of yourself?
Sure. I am Kari Phillips. I am the owner of RateWise Mortgage. As Cody said, I have been a lender since 1999. That's when I graduated from college. Right out of college, I was doing mortgages, and I've done in my career, over 10,000 transactions. So gotten a lot of practice over the years, messed up a lot at the beginning of my career and learned on the way and got better and better. I have two girls, 9 and 11 years old, Harper and Mika, and my husband, who I've been with since from 1998. He's a state probate attorney, litigator that makes our discussions very colorful at times. But I'm glad to be on, and I guess let's talk some mortgage lingo.
Yeah. Okay. So let's dive right into it. So Carrie, one of the things that I have always really admired about you is that you are willing to basically just tell people the total truth, whether it's a realtor or a borrower. You've been willing to share things with realtors and borrowers that most lenders kind of try to hide from the client or hide from the realtor. And so with that as kind of like our foundation for today, we can just speak totally freely as people who are in the business together, and kind of the best way to give the client the best experience. So let's start with rates. We had this period where rates were incredibly low, and it was wonderful, and everybody was benefiting from that. And then we started to hear, oh, rates are going to go up, rates are going to go up, and then they sort of did go up for a while, from what I experienced, at least from my perspective. But it seems like maybe they've dipped back down a little bit. And I don't know if that's the case or not, but just tell us from your perspective, what have rates done? And what do you think that what should we look for in the future? What could we expect?
Sure. Well, we hit an all-time low in December of 2020. That was fun. It was a fun period of time. It was crazy, but it was the all-time 50-year low. Last year's interest rate average, and I think this is a good thing to write down, because I'll give you a couple of stats that you can read off to your clients. Last year, the average was 2.72. So on an average, with all the FHA, VA, conventional, even with investments in there, second homes and primary residence, that was the average. This year, it's expected to be an average of 3.3. So in December, they hit the all-time low. In January, February, they inched up right around 3 1/8, 3 1/4. And now in the last week and a half, they're around 3%. So they're teetering here, but it's expected, and everything that we're reading is that rates are going to increase in May, June, July. Not, half a percent or anything, but they are going to inch back up above, 3 1/4. Some say by the end of summer, 3.625 will be the average rate. So with all those increases, the average of 2021 will be around 3.31. So, in my opinion, it might, as an agent, this is a great excuse to prospect, to call your past clients, to kind of give them the information of where rates were. If they haven't refinanced, you haven't missed the boat. They're in the next 2 weeks is going to be critical for someone if they do want to refinance or lock in, and buy, because after a couple of weeks, that's when it's going to inch up at least 1/4 to 1/2.
So Carrie, it's funny because if you were to go back like 5 years ago to say, well, now we think rates are going to be in the 3 1/4 or maybe even 3 1/2 range, that still is like, seems like really
Hello,
low rate. So I know you work with a lot of really top realtors that do a lot of business, and you kind of get their perspective and they get your perspective. Is this something that you sense is worrying those realtors, or how do you see them kind of reacting to this situation?
I a lot of successful agents, like I had said a minute ago, they're reaching out to their clients and just giving information. If their clients are given the information by you as a professional, it just kind of validates your position and you being the go-to, and what do you say, Cody, in our classes? You're creating confidence with your competence. So the successful agents are using it as a good business tool to be able to look like the expert.
Yeah, so I love what you said about that it's a really good opportunity to prospect. You had mentioned that to me a little while back, and so I kind of went down my buyer list from the last couple of years, and I've been making calls to those people, and it's been really good. I've been able to, it's a really comfortable, easy conversation to have with people. Basically what I say is, hey, I know that when you purchased this house, you went in at roughly this rate. And if you still have that rate, it might be a good idea to do a refi. And they know that like, that's not really what I'm there for, for them, but they realize that I am there for them. And then it lets me have a lot of other conversations. And you know how that is, that always leads to more business, more listings, more buyers. They, oh, I got so-and-so that is going to need a realtor. So,
Well, and you're not calling them to sell them. So it's a very comfortable conversation. You're just, hey, I'm looking out for your best interest. And you're right in that a side conversation usually ends up being, yeah, I had a friend that mentioned that they were going to, purchase the other day, and it just came out. It wasn't you, drilling them. So successful agents have always voiced to me that those are very good opportunities, as well as just a way to check in with your clients so it reminds them that you're their agent.
yeah. Okay. So, before we leave this subject, just kind of want to bottom line it. We do expect them to be going up, but not to the point where it's going to really be something to be super spooked about now. But if somebody wants to do a refi or a purchase, the next little while is a good time to do it because rates are kind of back down a little bit right now for the moment.
Yeah, and if clients ask, why is this happening? I think a very simple surface thing, that will be very understandable is that inflation causes, rising interest rates. A good economy, it increases interest rates. If you look at the stock and the stock is doing really well, that usually means rising interest rates. Like if just somebody wants to, see what's happening in a day-to-day basis, that's a good thing to look at. But I would put out another thing to say while you're prospecting is, even with your current buyers that are pre-qualified, 0.5% interest rate, if somebody got pre-qualified 2 or 3 months ago, rates were about 0.375% lower, even at today, at the 3%. So if you've got a client that's right at the cusp for qualifying with their debt to income ratio, I would reach out to the lender to say, hey, are we still good at the sales point now that rates have gone up? Just to do a checks and balances. And also I would then tell your client, hey, I checked with the lender, you're still qualified. We look good, even with a little bit of rising interest rate. Again, that's as a client, I'd be impressed if my agent kind of got that worked out, along with the lender. Just food for thought, because I did have a couple of clients where it impacted them. They were right on the cusp, and the 0.375 interest rate did, knock them down about 10,000 of what they could qualify for.
Okay, great, good to know. All right, so let's go to the next subject here. It's getting increasingly difficult for buyers agents to get their offers accepted, just a teensy bit. But you were mentioning to me the other day that you have quite a few realtors you work with that have not really felt that as much. I mean, obviously everyone's feeling it, but maybe not as much as other realtors. So what can we do together from your perspective as a lender? What can we do to make our opportunity to get offers accepted more and higher?
Well, I truly think it is prepping your borrower even before you take them out, your first time taking them out. I mean, I'm biased, but it's truly getting that full underwritten pre-approval at the beginning, but not just, sending him over to us saying, hey, would you pre-qualify? And yeah, get him pre-approved. You saying, listen, the normal process is do an application and credit pull and get a letter from your lender. We're going to do 5 levels above that, because right now in this market, we have got to stand out from the other pre-qualified buyers out there. And that means to be prepared with giving your lender income and assets and all the documentation that they ask for, even though it seems premature because you're not in contract yet. But that will allow the lender, Carrie, to give a full underwritten through, you've been through the validation process, which will make you stand out against the other 10 buyers that are just pre-qualified. So that conversation and that encouragement by the realtor to the buyer goes such a long way in it, rather than just us saying, hey, get pre-approved and give us your documents. What have I always said? Ursula has taken every class of ours. I think she could quote this, but you all are our Disneyland. They will listen to Disneyland. We are the dentist. We are like a have to pain in the, right? Sometimes, asking for stuff. But you being that cheerleader that basically says, no, this is what we need to do in order to get in the best spot. That is one of the key things.
So Carrie, let's break that down just a little bit there.
Yeah.
You covered a lot of things. So most realtors, even experienced realtors, kind of have this impression that when they send their buyer to a lender and the lender says you're pre-qualified, that is a pretty good indication that they're good to go. But you've mentioned something that's very different than that. So what really is that pre-qualification, and why is that, something that's not as sufficient as something else to get your offers accepted?
Well, pre-qualification is just application and credit. Nothing's validated. It's going off of a loan officer looking at an application and reading credit and then giving a letter and saying that it's been fully underwritten. On the pre-qualification, it says been looked at by Fannie Mae and Freddie Mac. It just means that it's gone through that automated underwriting system called DU or LP, if you've heard of those. the lender has not looked at income or assets, or the things that 70% of the time, 60 to 70% of the time, are the deal breakers when a mortgage bomb happens. It usually comes from assets or income not being calculated or looked at the right way from the beginning. So a full underwritten pre-approval is actually taking those documents, putting them in front of an actual underwriter, a real live person. And I've taught this in my class, but a loan officer typically does about 7 deals a year. 7 deals. That's not a lot. So they could be making a lot of mistakes on their pre-qualifications. I'm not trying to discount loan officers out there. I'm just saying the facts are the facts. Where an underwriter, they have to look at thousands of loans per year, and they got to get it right. So that's a simple explanation of the difference there.
Okay, cool. So we just had a question in the chat. Let me see if I can, okay, so Kim was asking, how long does an underwritten pre-approval take, and how is this letter to the seller different? That's a great question, because that's really kind of the point you're making there, is if you can differentiate your offer to the seller, you can get a lot of offers accepted that you wouldn't otherwise get, because everybody else is coming to the table with a pre-qual basically. I have lots of stories in my career about how this has made a huge difference, and I've gotten offers accepted that I know I would not have otherwise. So how long does it take to actually get that? And is the letter different?
So again, it comes back to a conversation that you have with your buyer, to be prepared with the documents that are going to be needed in order to give the lender. If they've got all their documentation ready on day 1 or 2, a full underwritten approval can be less than 5 business days. Could be sooner. It really depends on when we get the verification of employment. Sometimes it's in seconds, which is at theworknumber.com, or if it's, kind of a smaller employer that needs, the handwritten verification of employment, that might take a couple of days. But so that's the timing there. A pre-qual is same day. It's very quick. As far as the differentiation of what a pre-qual looks like versus a pre-approval, on our letters, and I don't know a ton of lenders that do an underwritten pre-approval, but our pre-quals say their application's been done, their credit's been looked at, DU has been run. A full underwritten approve, and it says there's levels at the top. It says level 1 is pre-qual, level 2 is a full underwritten pre-approval, and level 3, what we call WISE approval, is a different level. And we can go into that in a couple seconds if we have time. But the full underwritten approval, it's marked as level 2, and it says this borrower is not only had credit run and a DU run, but it's been actually looked at by a full underwriter. Income and assets have been signed off. This has been fully underwritten. So it's very obvious that it's a level above a pre-qualification.
Okay, excellent. So let's jump into your WISE approval. This is one of my most favorite weapons in the business. I absolutely love having a WISE approval. I explain this to all of my clients, by our clients. So it sounds like if you have an underwriter look at a file and issue an approval, then it couldn't really get better than that. So how is the WISE approval even better than just that initial approval from the underwriter?
Well, an underwritten pre-approval, it's actually called a conditional loan approval. It means that the underwriter's looked at it and she still has items that are needed from the borrower. That weren't initially turned in. Income and assets turned in, but there are other things like background checks, fraud guard, things that lenders pull typically when they're in contract, right before a clear to close at the end. And what we do is we pull those background checks and fraud guards and things that typically lenders do at the end, again, before they're in contract. And we're able to then turn that information back into the underwriter, and the underwriter then signs off everything that has to do with the borrower. So literally the WISE approval is one that says borrower's all been checked out. There's nothing needed from the borrower. The only thing we need now is collateral related items, the contract, the title, EMD, homeowners insurance. But it really makes for a nice transaction when you are in contract, because it just goes pretty quickly, and there's not a lot of hair. All the hair has been combed out before the contract. So
Yeah.
that WISE approval, the letter looks different also. It's very obvious that it's the third level, the highest level you can get to, and it says in big red lettering. The only thing needed has to do with the collateral. So I also think that that's kind of our prize, that we are very proud of it RateWise. But calling the listing agent when you put in an offer, meaning from a call from me as the lender to explain the difference of why that's special and why this buyer is not going to have a mortgage bomb happen in the middle of that, this will close. That call also I've learned has helped. I don't know, you've got experiences with that. I know that the Jonases have experience with that, but I do think that call really helps to explain it.
Yeah, I think no doubt. I mean, anything you can do to differentiate yourself in the mind of the listing agent, who really is who delivers this message to the seller, there's no question about that. It's very helpful. So, and how long does a WISE approval, how long is that good for typically?
120 days. The full underwritten, pre-approval, and pre-qual, they're all good for 120 days.
Okay, excellent. Okay, so I feel like we covered that subject pretty well. Anything else you wanted to say about that and getting offers accepted before we kind of go to some questions?
No, I'd love the questions. I think we've covered a lot.
All right. So Steve, welcome to the call from Cabo, Mexico. We don't feel bad for you. We're glad you're there. But thanks, we appreciate your dedication to being on our Power 30 call, even when you're out of the country. That right there is loyalty to synergy.
I had
knowing Steve, he's there to just rub it in a little bit.
Yeah.
I just had a bit, but no, I wanted to hear this great information from Carrie, because I think this really probably is the secret, isn't it? Getting your deal accepted. But no, I'm not going to rub it in your face about the beach.
I knew it. I knew it.
Enough. Go on mute. All right. So does anybody have any questions for Carrie about any of that stuff? I mean, we covered a lot of things in that short period of time. Anybody have any questions about that? Or
I have a question.
Go ahead, Kim.
So what are your thoughts, Carrie, about writing offers and removing appraisal contingencies as long as they have lots of cash?
So you always have the loan contingency there, and if the appraisal comes in low, like so low that they don't have the assets, and they've always got that out. I just, again, it goes back to discussion upfront with the buyer and preparation. You pulling comps and giving them information of saying, hey, this is probably what it will come in at. Do you have 15 grand over and beyond? I've seen a lot of strategies of writing a contract that say, no appraisal contingency, but buyer will pay X amount max over, over appraised value, to kind of just have a limit there. Some houses that works with, some houses it doesn't. If they've got 20 offers with no appraisal contingency and people are, willing to pay whatever it takes. But Cody can also, he teaches the seller beware class, that there's how many outs to a buyer in a contract. I think it's at least 9 or 13, or I don't know, you talk about so many.
10 and a half.
What is it?
10 and a half.
10 and a half. Okay, I was right in the middle. I've paid attention to your class, I promise. So, but I think it's fine as long as you have those conversations.
Yeah. So I want to add my 2 cents to that. While I do that, Carrie, can you put your contact info in the chat? Somebody was
Sure.
asking if we could get your contact info. I will tell you that right now you kind of have to be willing to do some of that to get your offers accepted. What I always tell my buyers is that my job is to help them get the house they want. Not to tell them the house they want, but to give them, to get it for them once they identify it. And so part of that is just telling them honestly what it will take to get a particular property. So I always ask the listing agent, what's it going to take to get this deal done? And then I just relay that information back to the buyer. So sometimes you have to do that. The buyer still has contingencies. But in this market, what we see from appraisals is sometimes appraisers are way out ahead of it. And I see stuff appraising that I'm like, oh my gosh, I can't believe it appraised for that high. And other times the pendulum swings way back to where they're appraising for much lower than I think that they should. I've seen it in my career many times kind of swing back and forth. And right now we are in a time where we are having a little bit of appraisals coming in low, and I'm seeing it kind of coming back to the middle, but you definitely want to have your buyers prepared for that conversation. And if they have the cash to do it, then they're in a much better position than the buyers who don't. Any other questions for Carrie on these subjects?
Latanya had a question about a client being in forbearance and wanting to refinance.
Okay.
A client will need to in order to get the refinance done, the client will need to bring themselves out of forbearance and fully pay it to current, and then can finish the refinance. They can't take cash out from from the refinance in order to pay their forbearance. They have to actually bring it current, and then the refinance can occur. It doesn't hurt someone's credit to be in forbearance, but that's what they would need to do in order to finish the refinance.
All right, so we're going to wrap this up so that we don't go over our time frame here. But Carrie put her contact information in the chat. One of the things I love about Carrie is that she's always willing to answer questions, and heaven knows I've asked her some stupid questions in the past, and she's been like, okay. No, but she's always She's always been willing to answer the questions. And I know if you give her a call and ask her whatever question you want, specific scenarios, general ideas, how the WISE approval works, whatever you want, she's happy to share that with you. And if you've taken our CE classes that Carrie and I teach together, one of our classes, she actually shows her pricing engine to us as realtors and shows us kind of the inner workings of how a loan gets priced out and how the rate gets chosen. And I for one find that totally fascinating, and most lenders are not willing to share that with a realtor, and Carrie will. So if that's something that you want to see, you can either call her and she'll do it with you, or you can take one of the CE classes that we teach together.
Cody, do you want to mention real quick the app, just how that works?
Yeah. So whether you're an Apple user or an Android user, you can go to the App Store and you can just type in RateWise Mortgage. The mascot for RateWise is a little owl, so you'll know you've got the right one there. And on the app is all of Carrie's contact information, bunch of resources for realtors that you can use, for things you can print out, flyers and stuff, mortgage calculators. And then there's a way on there that you can click the button and refer a client. That makes the client go straight into her lead management system that goes ahead of email and text and everything else. So you get an email confirming it. Your client gets an email welcoming them to the process with a link to the online application. And so lots of times if I've sent a buyer client into Carrie, before I even have a chance to follow up with Carrie about it, the client's already received that link from her, filled out the online application, they've already spoken, and they're already off and running. So I appreciate all that technology, and that's all available there in that RateWise Mortgage app.
All right, it is 9:30. I'm cutting you off, Cody.
All right. Thanks again. Great having everybody on the call. And for those who are watching the replay, we're glad you could also see it as well. And thanks again, Carrie, for giving us some of your time this morning.
Yeah, thank you guys for having me.
All right, guys, have a good one.
Thanks, Carrie.